Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. So in a short while from now, we will connect with our experts and on to the Buy Now, Sell Now lens. We will be focusing on the telecom space in detail. We'll discuss about that in a short while. But before that, let's have a look at what the markets are up to. So Cheryl, the markets are getting quite volatile, but nevertheless, we are still holding on to the greens and that's the good point.
Absolutely. A very good morning to you, Shrishti. A day after a break and the markets are in a very somber mood actually if you look at it. Even the SGX Nifty, I beg your pardon, GIFT Nifty indicated that we will be in for a flattish start for the benchmark indices. And that's exactly how it is transpired. Now we are actually seeing gains of about 0.2% on the benchmark indices. You have Nifty Bank also moving in tandem with the benchmark indices. You have the advanced decline ratio tilted in the favor of the gainers as we speak. Talking about the list of gainers, then Power Grid is ruling the charts, 3% uptick, 3.5% uptick for Power Grid. You have BPCL, Hindalco, Tata Steel, Adani Ports among the other set of gainers. While on the flip side, Nestle India is taking a sharp knock of approximately 5% or so. We have a clarification that has come in from Nestle India with regards to that particular reports making the rounds on the sugar content coming in for infant cereals. So the company has written to ET now and they've said that they have reduced the added sugar up to 30% in the past 5 years depending on the variants in the infant cereals. The company has actually responded to the allegations of added sugar in baby cereals compared to Europe and UK. They're saying they regularly review and reformulate the portfolio to reduce further levels of added sugar. Remember, there was a Swiss investigative organization, that's Public Eye, that conducted the study on Nestle's infant cereals and they found the sugar content to be a bit higher on that particular front, and that's why the stock is also reeling under pressure. Now 5% at the day's lowest point for you. We will connect with our reporter as well who actually got us those clarifications coming in from Nestle India later in the show. But let's talk about what are the sectoral indices doing today. Remember that you have a major auto major that will be reporting its earnings today. You have that is Bajaj Auto, and you will also have IT major reporting its earnings today. That is Infosys. So eyes on both of those counters. But on the sectoral front, FMCG index is down about 0.7%, mainly due to Nestle's performance. Apart from that, you have metal that is up about 1.5%, oil and gas, PSU Bank, all of them seeing good gains. So that's the way how the market texture is looking like at this point in time, Shrishti. But all of a sudden, there's one sector that's made a comeback, and that has to be the telecom sector. You have Vodafone Idea FPO that is open today, and on back of that, you have a very positive note as well.
Well, yes, absolutely. IIFL Securities has come out with a positive note, and everybody was just talking about that post-elections there could be some tariff hikes as well, and even the companies are literally looking forward to that. And IIFL Securities also suggests that Jio platforms could also be one such counter that could be listed soon. So what are the valuations looking like of Jio platforms, and what does this mean for Reliance as a whole? Firstly, let's put the spotlight on this segment, and Somit is joining us to give us all those details.
Well, Reliance Industries remains in focus because the single biggest trigger, that is the demerger and listing of its telecom arm Jio platform, is expected soon as per IIFL. Now, why IIFL is expecting this is because they are also saying that there could be a couple of tariff hikes in the next 3 calendar years in the telecom sector, as against 2 that we have seen in the last 4 years. This definitely shows that the pace of tariff hikes are expected to increase, and this will happen as and when Reliance Industries goes ahead or plans with an IPO for its telecom arm Jio platform. Now, owing to these tariff hike factors, IIFL has also increased the enterprise value of Jio platforms. Now, this is the enterprise value of Reliance Industries' stake in Jio platform. Now, Reliance Industries owns around 66% stake in Jio platform, while the remaining 33.7% is owned by investors. So the enterprise value of its stake has now increased to $68.9 billion as against $63 billion earlier. However, if you see how the street is valuing Jio platforms, the enterprise value is actually much more than what the street has been valuing. The average of 6 analysts that we saw are valuing Jio platforms at close to 80 billion US dollars, while Reliance Industries enterprise value stands at close to 287 billion US dollars, which is which means that Jio platform forms nearly 29% of Reliance Industries currently. So what could be the potential market capitalization of Jio platforms on listing? Well, it could be anywhere between 5.5 to 5.6 lakh crore rupees, and which is nearly 29 or 30%, and this could be the single biggest trigger coming in for Reliance Industries going forward. So what is Jio Platform currently? Jio Platform owns the telecom arm of Reliance Industries, that is Reliance Jio. It also has the enterprise business and the broadband business. Other than that, it has invested in host of startups like EasyGov, Redis, Care Expert, JioSawa, Netradyne. All these companies are currently in growth phase, so analysts are not assigning much value to these companies, but these companies as well could be a big, have the potential at least to be big companies going forward, and hence Reliance Jio or Jio Platform has invested in these companies. Apart from that, it also has host of apps like My Jio, Jio TV, Jio News, Jio Cloud, Jio Call. So the upside potential when it comes to Jio Platform is much higher, but at this moment analysts are valuing Jio Platforms at 29% of Reliance Industries value. The enterprise value stands at close to 80 billion US dollars.
All right, thank you so much for that, actually, Somit. But Vodafone Idea, as we know, the FPO opens today, and in this regard, my colleague Ajay Sharma actually caught up with the Vodafone Idea CEO Akshay Mundra on it, and listen into what he had to say with regards to the path going ahead for Vodafone Idea.
India today has the lowest ARPU amongst major economies in the world. Today, India is about $2.1 of ARPU, whereas China, a comparable size of population and economy, of course economy is larger, is over $6.5. So we are less than 1/3 of China's ARPU. So by that benchmark, there is a lot of room for ARPU to go up. The second is that today none of the players in the industry are returning their cost of capital. This cannot be a situation, and this has not been just 1 or 2 years, it has been 6 or 7 years. And the situation has got more accentuated with the 5G investments getting added onto the already large 4G investments. So it is imperative that for the industry to be healthy, tariff correction is required. It is, I would say, almost inevitable. And I would expect it to happen sooner than later. There have been tariff increases twice in the last 4-5 years. I believe that the rate of tariff increase, I mean the speed of tariff increase needs to be better in going forward, because large investments have been made in 5G and people need to get a return on their investments.
Okay, so that was the whole picture of telecom space right now. Jio Platforms listing in the upcoming times, as well as Vodafone Idea's FPO, and that stock is also in focus today, up around 3%. But let's understand from our experts that within the space, is there any pocket that they are finding opportunities, any stocks that are on their radar? Let's understand that from two of our very special guests on the show. Kush Bohra is joining us on the technical front, and Vivek Karwa, as always, on the fundamental side. A very good morning to both of you. And Kush, let me first come to you. Since a lot of these telecom stocks are in focus, we have seen Jio Financials actually doing pretty well, but Jio Platforms is really another counter that, and one of the recently listed play. But apart from that, Bharti Airtel, no stopping for this particular counter. Even Vodafone is also in focus. So any stock that you like at this point in time, and what's your overall view on this space right now?
Sure. So first up, hi Srishti, Vivek, hi Cheryl. Well, if you look at the telecom index, the only BSE provides that. If you look at the telecom index for BSE, over the last, I would say 6 to 8 months, the index has been on the rise. Now, what we are seeing recently is that there's a slight negative divergence. What that is suggesting is that, the pace is perhaps slowing up. Of course, that is, due to some of the participants, within the index, some of the constituents not doing as well. Now, if we talk about stocks particularly, then there are only two stocks that really catch my eye. One of them is Bharti Airtel, and the other one is, Industar. Now, if you look at Bharti Airtel, the stock's been on the rise. Recently, seen some sort of a consolidation. but the kind of setup that we are seeing indicates that the stock is actually quite ripe to hit those 1400 odd levels, in the coming times. Indus Towers is a way more interesting setup because if you look at the stock, it's almost at a 2.5 year high, rising volumes, strong momentum. The stock could very well hit 400 and above level very soon. These are the only two stocks that I have on my radar from this space. I know idea has been in discussion for a long time in a lot of forums, but it's an overcrowded trade and the stock's not really done as much. Now, if the ARPUs go up and things do turn around for the sector, then the stock might see a bit of a rise, but I think that will be used as an exit opportunity by a lot of players. So idea I have on my radar, but I'm not too gung ho about it. So Bharti Airtel and Indus Towers are the two stocks that I'm looking out for.
Right, Bharti Airtel and Indus Towers is what Kush is looking at. I thought that since things are turning a little brighter for Vodafone Idea, and that would at least make it to your list. But yes, like you mentioned, actually, Kush, the stock has done absolutely nothing despite a slew of announcements coming in with regards to his FPO one. So good morning to you, actually, Kush. Good morning to you, Vivek. And Vivek, what's your view coming in on the telecom sector as well as the talks that is now making rounds? That most likely we are likely to see Jio platform listing that's mentioned in the brokerage note, and also everyone has been anticipating that, isn't it?
Good morning, everyone. Good morning, Kush. See, I would again go with Kush. If I really want to buy telecom, I would only go with Bharti right now. And in fact, as a disclaimer, I don't have any investment in telecom as of now. The valuations look quite rich right now. And as Vodafone, the management was saying that let the ARPUs increase and they might increase in future. Now, when is that future going to come? I don't know. So once that future really comes and ARPUs actually start going up, and if there is some tariff hike, at that point of time, we can look at stocks. And again, the first beneficiary will be Bharti and Jio. Vodafone, see, you are bringing FPO, fine, but company is declaring what losses of 6,000-7,000 crores every quarter on quarter. Now, how much is that going to make difference after FPO? I have no clue. I will really stay away from the stock. It was at 18, 19, and that time people were really bullish. But that time we were, in fact, I made people sell whoever had it. Even at these levels, I'm really skeptical. Yes, I would wish that company comes back in black because there shouldn't be duopoly. There should be at least 3 players. But again, that's just my wish. So I would stay away from telecom right now.
All right, we'll stay away from telecom is the word coming in from Vivek with regards to that particular counter sector as a whole. But let's talk about what exactly happening with Bharti Airtel. As you can see it on your screen, it's near its day's highest point. Apart from what IFL had to say in its note, in fact, there is a news piece also that could be adding to those gains for Bharti Airtel. Bharti Airtel, Dialog, Axiata, as well as Axiata Group will be merging the operations in Sri Lanka. So Bharti Airtel has said that Dialog Axiata will be acquiring 100% stake in Airtel Lanka, and out of that the company will be getting 10.36% in Dialog as part of the Airtel Lanka deal. So on back of that also you can see some sort of a buoyancy coming in Bharti Airtel in today's trading sessions, 2.4% uptick coming in on that particular counter. Let's take a look at what Nestle India is doing at this point in time, because short while ago you saw flashes on your screen with regards to sources have told ET now that the government can look into the issue of Nestle adding sugar to the baby food in India. If you look at Nestle India's stock price right now, is a tad bit off the day's lowest point, but nevertheless down to about 3.5%. My colleague Sumit is here to tell us exactly what this entire report is all about, what the sources are telling him with this regard. And Sumit, back again, Nestle India looks to be in a little bit of a trouble spot with regards to this sort of a report coming in from a Swiss investigative report.
Well, absolutely. Government sources are telling us that they're concerned over the reports, and more so when this practice is not there in developed nations. Why in developing nations, including India? Because this is something of concern. This concerns health of children. That's a very specific thing here. Also, the Consumer Affairs Ministry can also look into the issue from different perspective, that why Nestle is not doing this thing in developed nations when they are doing it in India. So reports have come that Nestle adds sugar or honey to its baby food products, including cereals, and food and milk products. So that is something which is cause of concern. Nestle, we know, is the world's largest maker of such products, and it's a Swiss giant. But having said that, these practices, when they are not done in anywhere else in the world, why are they being done in India? That's a big cause of concern. Government can look into it. What overall the development's going to be? We will keep an track of that.
Thank you so much for that, Sumit, for actually getting us those details, especially what sources have to say with regards to this, and the fact that the government may look at it, and the fact that they're concerned why such a practice only in the developing nations coming in. So that's a crucial one to watch out for. Thank you so much, Sumit, and we'll touch base with you as and when you get more updates with this regard. So that is Nestle India for you. The stock is now trading low by about 3.5%. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and as we were actually talking about the entire telecom space, you saw actually a good recovery creep into the markets as well. Take a look at what Nifty Bank, as well as if you look at what the broader markets are doing, a sharp up move coming in from all of those indices from the day's lowest point. Actually, you had Nifty that touched almost the day's highest point, 0.6% uptick coming in for Nifty. Nifty Bank also seeing good gains, as well as the broader markets also have put in a good steady set of recovery. But remember, viewers, this is a show where we get you answers for all of your stock related queries. You can write to us on the WhatsApp number that will be flashing on your screen, and do remember to mention your name each time you write to us. Mention the stock name, the buy price if you already purchased it, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And with that, let's bring on board once again our experts who have been waiting by patiently. We have Kush Bohra, who has joined us on the technical front, while we have Vivek Karwa on the fundamentals. Once again, good morning to both of you, gentlemen. And let's kickstart with the queries then. And the first one is coming from Yogurani, who's writing to us from Saudi Arabia, and she's holding about 2,000 shares of Exide Industries at a price of 466 rupees per share. She wants to know whether she should exit now or hold on to this for just one more week, or will there be any price change when Elon Musk arrives to India next week? What's your it's a $1 million question, isn't it? But Kush, for the next 1 week, what's your take coming in on Exide Industries? She's bought it at 466. The stock has actually seen a very sharp rally over the last 2 weeks on back of the fact that on that tie-up coming in with the Hyundai as well as Kia. So what's your take coming in on Exide Industries for the next 1 week?
I'm extremely surprised because the high for the stock is 466.75. She'll have that remorse that, as we say, मैंने stock लिया और वहां से नीचे गिर गया types, right? So, that said, I don't think that was a good entry point. I still don't think, this is a good entry point for the stock till it corrects to, those 430 levels. While the momentum can take it higher, but it is into extremely overbought territories. And, we are seeing some effect of that today. 481.7 is the high of the day. I'm sorry, 466.75 was the opening. So I'm assuming she bought the stock right at the open. Here, my suggestion would be to now hold it with a strict stop loss at 450. If the momentum does take it to her buying price and higher, keep the stop loss trailing up and exit at the first opportunity you get. The only reason being that the stock is in an overheated territory.
All right, so that's the take coming in on Exide Industries. After a great run-up in the past couple of weeks, the stock is at an overbought territory as of now. But moving on to the next counter then, and the next query is from Dr. Uday Singh. And Vivek, any view on TV18? He has bought 8,000 shares at a price of 51 rupees. What are the prospects of the company, as well as can he go ahead and add more at current market price, is his query.
Okay, see, sometime back we were talking about telecom, and I think the fight is on for the media sector as well. So, of course, you are the competitor for them, but I feel TV18 going forward will get merged sometime into Network 18, and these companies would become one. So, if really somebody wants to buy instead of TV18, I feel Network 18 could be a better bet for a longer term. And again, going forward, there would be good competition between TV18 and the Adani Group media. They are also planning to come in, and your group Times Now. So it will be again a great show. I think you should hold it for long term, and TV18 or Network 18, either of one, but Network 18 preferably.
All right, so let's move on then and let's talk about the query coming from Radha, who's writing to us from Bangalore. She wants to know whether she should look to buy Geo Financial at this price. What's your take coming in on this? Vivek, I'll take this to you because I'm sure that there is limited chart history for actually Kush to speak about. But Kush, if you want to give your views, you can. But Vivek, first coming to you, Geo Financial, what a rally this stock is seeing over the last few trading sessions. No doubt one of the factors is also the tie-up with BlackRock.
See, in fact, I had recommended this stock on ET Now and Swadesh, both the channels with target of around 320, and at around 350 we came out because at these prices I feel that the valuations are really overstretched, and whatever news was to come has already come and market knows about it. So on rallies, I think you should at least temporarily book profit. This is fair valuation. In fact, about little above fair valuation is what the stock is trading at. Fair valuation comes at around 360, so 382 should be a book profit kind of zone. One more thing, if you ask Kush, definitely because technicals are showing it to be in bull trend again. So have a trailing stop loss if you are really holding it.
She's not holding it and wants to enter. Do you think now is the time because it is
No,
so
I would
fast?
not. I would not enter this.
All right. And Kush, what's your take coming in since Vivek has conveniently passed the ball on your court as well, slowly and steadily. So what's your take coming in on Geo Financials then?
Oh, I'll happily take it. Time and again, we've recommended a buy on Geo Financial. Although, yes, on certain time frames, if I look at it, the stock has gone into an overbought territory. So my suggestion would be to, book partially and then buy close to those, 350, 360 levels, incidentally, where the fair value is. The 20 DMA also lies around there. So my suggestion is don't exit this stock completely, because what happens is once you exit a stock completely, you sort of tend to lose, your hold, your grasp, on it. So my suggestion is book partially, and whenever it comes to those 350, 360 kind of levels, buy back the quantity that you've sold.
The take on Geo Financials. But moving on then, in Kush, one of the counters that Anjali wants an advice on is Adani Ports. Can she go ahead and buy this counter at current market price? How are you looking at it technically?
Well, Adani Ports is set up quite beautifully. I know it's seen a bit of a profit taking in the last, 8 to 10 sessions from that 1400 odd level. But interestingly, the 50 DMA is where the stock actually often takes support and rebounds from. We're seeing a similar setup today, between yesterday and today also, the Tuesday and today. My suggestion is that take this dip as a buying opportunity. You have a very clear support zone at 1290 odd levels. So if it's a positional kind of a buy, use 1290 as your stop loss. On the upside, 1365 and then 1400 are the targets that you can look for. So use this dip in Adani Ports as a buying opportunity, and you can go ahead and add more with a stop loss of 1290.
All right, let's take this one from Shiva, who's writing to us from Chennai and wants to know about AIA Engineering. What's the fundamental take on this particular counter for the next 2 years? Vivek, he's holding about 65 shares at a price of 4,100 rupees per share. What's your take coming in AIA Engineering?
See, at this rate, also the stock looks at least fairly valued. It's not overstretched. And going forward, once the budget is on, I think the infra space and the manufacturing space would still see a push. So please hold on to the stock. Looks good. It had corrected a lot from highs, and I think is due for, say, again, a recovery. Company is almost debt free. In fact, it's zero debt company. And also, if you look at the say high and low, I think, yeah, it's going to bounce back. So please hold it on, and you should, if you want to enter afresh also, I think you can buy at these rates.
All right, that's the take on AI engineering. Moving on, and Vivek, coming to you for the next query. This one is from Venkat Rao, and he wanted an advice on Geo Financial. So, Mr. Venkat, both of our experts have given an advice on that, so please refer to that. But Vivek, is another query is on Dome's industry. I'm not sure whether you track this one or not, but any advice to enter afresh in this one?
See, it's a kind of commodity business when it comes to stationery. And there are other listed companies which are supposed to do really great and never did that much great. So stock has recovered a lot at these valuations. I think you should really be careful and book profit as and when it keeps moving up slowly. So book profit would be my suggestion. Valuation wise also costly, and business wise also, I think it's too wafer thin margin business as such.
So that's DOMS for you, which is into art materials as well as stationery company. And we have a slew of queries already answered on Geo Financial, Adani Ports, TV18. Just recapping for all of our viewers who may have tuned in right now, these are the queries that are done, but a lot more on the other side. So don't go anywhere.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And Kush, coming to you for the next query. This one is from Satya Veni. He wants an advice on two counters, Ambuja Cements, one of the news buzzers today, and the stock was also buzzing. And also he wants an advice on Zomato. At this price point, can he go ahead and enter afresh?
So, Shrishti, I think both the stocks are, in an uptrend. The consolidation is, along with the market. But if you ask me, both of them are now a buy on dips, kind of a setup. Ambuja Cements, if you see, has shown, a bit of a fair recovery of late. However, that, 640, 650 kind of a threshold is acting upon it. So the closer it gets to that level, the more, the lesser the risk reward ratio will be. So my suggestion is close to 600, 610. You can buy Ambuja Cement. From there on, 650 will be your target, and you can keep your stop loss at the 590 level. Zomato too, while the stock is in an uptrend from a near-term perspective, I think a better price would be close to 177, 175 kind of levels. It's already seeing some sign of profit booking, and that's not a bad thing after such a good run-up. Some consolidation is healthy for the stock. So Zomato also, if you get anywhere close to 177, 175 kind of a range, should be a good entry point. Both the stocks are a buy on day.
All right, let me take this query coming from RK. No doubt there are a lot of stocks mentioned in his query, but let me take this because he's been writing to us quite often. He has rate gain as well as Apar Industries. He's seeing 15% gains in rate gain and about 70% gains in Apar Industries. Now he wants to know whether he should exit from both of them and instead look to buy Adani Power, Nestle, Hero Moto, or for the matter of fact, AU Small Finance Bank for a period of 2 years. What's your take on this? Vivek, what should he do? Should he book out of rate gain and Apar and instead look at these other counters that he's mentioned, like Adani Power, AU Small, Hero, or for the matter of fact, Nestle?
The rate gain, I feel he should hold it on. And if it comes to 600 levels, in fact, add a bit more quantity. Now, going forward, we are overall bullish on hospitality. We are bullish on airline, travel, this sector, and rate gain is one of the leading players in this segment, providing all companies the SaaS services. So going forward, the sector is likely to do well. So please hold it on. Looks overall good, and the stock also has corrected. So at 600 levels, I would be really very comfortable to even add fresh. Now, when it comes to Apar, you can again continue holding it. Valuation wise, compared to the peer group, doesn't look very, very costly, and that's the reason stock is still doing well. So there should be some more valuation catch up, but I think the stock can go till 7,000 to 200, 300 levels. So that is one part. So I'm not giving an idea to switch here. Both the stocks can be held on.
All right, Vivek, once again coming to you because this query is from Chandrasekharan and he's been holding shares of Ashok Leyland 1000 at a price of 179 rupees, and it's been 6 months that he's holding this counter. The outlook for the CV industry, how do you see that, and do you believe that the stock price is expected to do better in the times ahead, and should he continue to hold on?
See, what I feel is when it comes to light motor vehicles, the demand should say taper from here, and that's the reason I'm not very bullish from at these levels on Tata Motors and other four-wheeler companies. But when it comes to heavy commercial vehicles, which Tata Motors again they also have a segment and they're going to split it in future, and Ashok Leyland manufactures, I think this company should do well. Now, will since you're holding since many months, will it do in short term? I doubt so. But the company is superb. They have full electric trucks lineup also coming up in near future, and valuation wise also the stock is compared to Tata Motors and any other heavy commercial vehicle companies looks really say cheaply valued, I should say. So 220 should be the target as and when there is some focus by the market on the stock. So overall the stock is good.
All right, let me take this next query then, and this one is coming in from Usha, who's writing to us from Bangalore, holding 500 shares of Bombay Dyeing at the levels of 153 rupees per share. Kush wants to know, Usha wants to know if there's any short-term target to keep in mind when it comes to Bombay Dyeing.
Well, from the near-term perspective, I think there is a bit of a consolidation going on, and that might continue. I think the first target that you can look for if I round it off is actually 175, and once that is taken out, we're looking at another number that I'll have to round off, which is 185. Now these are the targets, but there is a possibility that the stock could actually consolidate for some time, and it might be a while before you see some kind of a momentum on this stock. On the downside, 158, 160 kind of levels have a strong support. So I think that's the stop loss that she can have, and the good thing is that it'll still be above her buying price. So 175 to 185, but I don't see a very big breakout or some sort of a momentum coming in the stock anytime soon.
All right, moving on then, and the next query that I have is coming in from Satya actually, and Vivek, he wants to take on Nestle right now because this counter has been in focus. We just covered a news flow in this one as well, and the stock is also down, and there has been a slew of negative news coming in on Nestle India from the point of royalty fees hike, and now the government is also looking out to the sugar content in their products. Satya wants to know, is this at this point, is this a good stock and good entry point to enter into this counter?
See, of course, the company is good, but when the news is negative, we never know what is going to be coming out next. So you should believe in that cockroach theory, that when you kill one cockroach, it doesn't mean that there are no more cockroaches inside your cupboard. More may come out. So wait and watch. If there is some more correction at that point of time, we can have a look. But the problem here is the moment they decide to remove sugar and start adding whey, I think the prices would shoot up by at least 50%. So it has to play out. It will take time. So when the negative news is on, please stay away from the stock.
Cockroach definitely must have triggered a lot of them, because I did actually turn around and look around me for once actually. Thank you, Vivek, for that. But Kush, let me come to you. The next query coming in from Sugumar, who's writing to us from Chennai. He's been writing to us for a couple of days. He wants to know about Bansali Engineering Polymers, about 2,000 shares at a price of 109 rupees per share. He's holding on to this counter. Now he wants to know whether he should switch out of it or look to hold on to it.
I think it's a good idea to switch out. The stock's really not done much, and every rise that we've seen in the stock has actually been taken as an opportunity to sell. It's trying to find its feet, but as I said, from a near-term perspective, the momentum could look a little enticing, but on the whole, there is selling pressure, and the levels, that the buying levels of 105, 110, that zone is actually a selling point. So while the momentum can take the stock to the buying price, but once that is hit, I think they should exit out of this one. So Bansali Engineering at the price of 110 when it comes, it's a good idea to exit and switch to some other space, some other stock.
All right, moving on then, and Kush, once again coming to you, this query is from Kusuma, and she wants a view on OFSS from you. Any short-term targets to look out for, and what is the medium-term outlook on this one, say for the next 2 years?
Well, we had seen an extremely sharp run up on the stock, and from there on, we are seeing consolidation. Now, while it may look like that the stock is in a bit of a downturn, which it is from a near-term perspective, but if you put it in the perspective of the rally that it had seen, I think this is still some sort of a profit booking only that we are seeing. Now, should you enter the stock now? My suggestion is wait, because the fall is not complete yet. The stock is still in a bit of a downturn. For me, 7,500, 7,550 is the zone that I'm watching for. If that is broken, then I would say that there could be some more selling pressure that the stock could see. But if that level is held, then there's a possibility that the stock could take support and revive from those levels. So 7,500, 7,550 is the level that you should watch for in this stock from a near-term perspective. I think the kind of moves that we've seen, over the last few months in this stock, I mean, I won't be surprised to see 9,500, 10,000 plus kind of levels, in the months to come on this stock. So buy on dip, 7,500 on the downside from the near term remains critical, and on the upside, about 10,000 is the level that you should watch out for.
All right. This next one is coming in from Subrata Mukherjee from Kolkata, and he wants to know about for a one-year investment whether KPIT Tech is good or Tata Technologies is good. What's your take on this, Vivek? For 1 year, which one would you bet on, KPIT Tech or Tata Tech?
See, KPIT Tech, I remember talking from 300 levels and it has really done well. But going forward, Tata Technologies, I would avoid at these prices. I think the stock has done whatever it has to do, and it will take time for the stock to recover from here. KPIT on dips, yes. They are again coming up with full 360 I say degree facility of EV vehicle charging, and that's the main business, and that business would continue doing well even in future. So hold it on even at these levels, and if you really want to buy slow and steadily, I think in a SIP manner you should buy this. Valuation wise, it doesn't look very cheap. Of course, it will not trade at cheaper valuations because the future also looks good. So slow and steadily keep adding if you don't have, and if you really have it, just hold it on.
That's the take coming in on KPIT Tech. But with this fears, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and the recovery is steady when it comes to the benchmark indices. We are holding on to 6% gain when it comes to the Nifty. If you look at the broader markets, 1% uptick coming in for the broader markets. So yes, good going for the markets after a sluggish start for the day. But let's continue taking your stock related queries then, and this one is coming from Rahul Reddy. And he's written to us about Jubilant Foodworks, which he's purchased for the level at the levels of about 454 rupees per share, and the other stock is Bank of Maharashtra at the price of 54 rupees per share. He wants to know whether he can add some more of these counters or hold on to the quantity that he already has for the short to medium term. Actually, he's written short to long term, but I believe it will be short to medium term. What's your take, Kush, on Bank of Maharashtra as well as Jubilant Food? Add some more or just hold on with whatever he has?
Well, Jubilant Foodworks is actually an exit. There is a support zone at 415, 425 kind of zones. So if that is taken out, then the stock could slip further. There isn't really an indication that the stock is actually attempting a recovery. But my suggestion would be Jubilant Foodworks should be an exit. But as far as Bank of Maharashtra goes, this stock seems on a very fairly strong footing. All the dips that have come into it have been taken as a buying opportunity. Support zone comes in at 59.560. So this is a stock that can be held on to, perhaps even added at the current levels. On the upside, the stock has a potential to reach 65 and then 71 kind of zones. So Jubilant Foodworks is an exit. Bank of Maharashtra is a hold for a target of 71.
Vivek, what's your view on Chambal Fertilizers? Dr. Ang has bought 100 shares at a price of 373 rupees. What is the future of the stock going ahead?
See, if you look at valuations wise, the stock still looks cheap. In fact, the stock has done good from 280 levels. It has come to present 373 odd. What I would suggest is if it comes to around 420, 430 at these levels, you can book profit. I'm not very bullish on fertilizer as a space, but the company also has chemicals in the business, and that's the reason it might again go to 420, 30. So that would be the take, and at 11, 12p doesn't look costly at all.
All right. This one is coming in from Dr. Zeenat Kausar, who's writing to us from Ranchi. Wants to invest in Crompton Greaves, SJVN as well as NLC India at current level. Is it advisable to go ahead and do this? What's your take coming in on all these three counters, Kush, given the fact that they've also had their fair share of rally, isn't it?
Sure. So Crompton Greaves, I'm not too constructive on. There is an attempt at recovery for sure. The 265, 270 zone has been held on, and the stock's attempting a recovery. But I think there could be some challenges and some headwinds for the stock, from a near-term perspective. So Crompton Greaves for now, I would say, at least watch or keep on your radar. I wouldn't jump into it right away. SJVN, yes, there is a recovery underway. This is a stock that can be considered for further addition, fresh capital allotment. So I think SJVN is something that you can consider. I think 145 is a very reasonable target for this. And NLC India, we've been constructive on this stock for a while. We've also recommended this to our clients. Just as a disclaimer, as a part of our advisory service, we've been discussing this stock with our clients. So this is a stock we're fairly bullish on. this you can consider, buying even at current levels. 255 and then 270 are the levels that we're looking at as target, and support zone comes in at 210. So NLC, Indian, SJVN are a buy. Crompton is a wait and watch. If the recovery does sort of play out fairly well, then you can consider buying. But for now, just wait and watch.
Okay. Moving on then, and the next query that I have, Vivek, is coming on two of the counters which have seen phenomenal moves. One of them is IRDA and the other one is Electra Green. And Vinny, who's a senior citizen, wants to know any of the stock that you still like at this point in time, and if yes, then any entry levels to go ahead and initiate the investment.
If you're looking at very, very long term, IRDA looks good after this correction. But if you're a senior citizen, I would put avoid on both the stocks, particularly for your profile, because I don't think the stock is going to recover quite fast from here. It might take at least, say, 18 months time duration. So Electrodol will be a pakka avoid at these valuations. The stock looks quite costly. But IRDA, you can look at it, buy in a small manner, maybe like a SIP, and that would be the best strategy for a senior citizen.
With that, let's kickstart with the rapid fire then. And the first one coming your way, actually, Kush, it's on R Systems. Mr. Singh from Pune has 1,000 shares at a price of 257. What's the chart telling you?
Well, I'm sorry, Cheryl, what stock is that?
R Systems.
Sure. There's a recovery, underway. There is some sort of pressure that we see at the 500 odd level. So hold on to the existing position. Don't look to add further just yet.
All right, Vivek, Raghavendra Rao is holding 3,500 shares of IOC and his buy price is 146 rupees. Is that still a hold, or can he go ahead and book profits right now?
Just forget that you have the stock and keep it somewhere hidden. It will really create wealth for you.
All right, Mahalakshmi from Hyderabad wants to know about PNB, 1,000 shares purchased at levels of 135 rupees per share. For the short term, is it possible that the stock can reach a target of 142 rupees per share, Kush?
Oh, absolutely. PNB is a hold from our end, and 142 is a very likely target.
All right, Vivek, Gautam from Mumbai wants to know between SBI and SBI cards, which amongst them would you bet on for the next 12 to 18 months?
See, SBI cards is owned by SBI. So when you buy SBI, you're buying SBI cards as well. So I would go with SBI.
All right, Jaya wants to know, is it a good time to enter Infosys and Power Grid at current price? What's your take, Kush?
Infosys, I'm not too excited about. Power Grid is a different story. This is one stock that can be considered for addition at current levels. So Infosys is an avoid. Power Grid is accumulate.
All right, Kush, Leena wants to know your take on HOEC and any short-term targets to look out for. She's holding 5,000 shares from a price of 190 rupees.
You'll have to excuse me on this one. I'm not. Oh, okay, got it. Sure. So from a near-term perspective, I got it. There is momentum. Volumes have picked up. There is a possibility that 220 is perhaps a reasonable target on this one. Support zone comes in at 192.
All right, this next one is coming in from Sri Kishore Sharma, and he has IDFC First Bank at a price of 61, IDFC at a price of 117 rupees per share. Vivek, for the next 3 years, makes sense to stay put with these counters, keeping in mind the merger as well?
See, the stock has been disappointing last 1 decade, I should say, and going forward. Will the situation change? I doubt so. It is not going to happen in short term. So if you're going to look at maybe 5 years time horizon, you might look at the stock. But again, that's to 50% chance. So I would, okay, sorry, rapid fire. Go. Yeah, it's a avoid.
All right. Thank you so much, Vivek, as well as Kush, for resolving all of your queries and as well as taking note of the rapid fire session as well. But with this, it's time to wrap this edition of Buy Now, Sell Now. Before we bid you goodbye, a quick programming note, viewers. ET Now and India's oldest stock exchange, BSE, is celebrating BSE Day tomorrow, which is an extraordinary event that showcases the legacy and the future of Bombay Stock Exchange. The day will commence with a ceremonial market opening where Nikunj Dalmia will have the honor of ringing the opening bell from the floors of BSE with esteemed guest, and our keynote guests include Keki Mistry, Himendra Kothari, alongside BSE's MD and CEO Sundaraman Ramamurthy. Stay tuned for our exclusive special coverage on BSE Day tomorrow.
With that, we wind down this edition of Buy Now Sell Now. Goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.